Good morning and welcome to all of you in the room and those of you who are following us on the screening platform or streaming platform. As the Director of Ceremony alluded to, we had our meeting yesterday. We have reviewed global, regional, domestic, economic and financial activities, and we have decided as the monetary policy of the Bank of Namibia to keep the repo rate unchanged at 3.75%. What are the developments that have influenced that? I think the first one is, let's look at the global economic developments. Global gross domestic product is estimated to have contracted by 3.5% in 2020 from an expansion of 2.8% in 2019. The contraction is mainly on the back of weak growth in most of the monitored advanced economies and emerging markets and developing economies. Going forward, the IMF, in its January 2021 World Economic Outlook update, has projected the world economy to grow by 5.5% in 2021 before moderating to 4.2% in 2022. The improved growth is mainly attributed to the potential positive effect of the COVID-19 vaccine rollout on economic activity around the globe by the second half of 2021. Real gross domestic product in advanced economies is estimated to have contracted by 4.9% in 2020 from positive growth of 1.6% in 2019. In the emerging market and developing economies, GDP is estimated to have contracted by 2.4% in 2020 from a 3.6% expansion in 2019. Most of the monitored economies are estimated to have contracted in 2020, with severe contractions observed in the Euro area, in the UK, India, and South Africa. The contractions were mainly caused by the economic lockdowns due to the COVID-19 pandemic. Going forward, the IMF projects the advanced economies to grow by 4.3% in 2021, while a 6.3% expansion is projected for the emerging market and developing economies. The positive prospects are on the back of lifting of economic lockdown measures and positive sentiment with regard to the successful rollout of COVID-19 vaccines globally. Key risks to the global outlook include the depth and extent of multiple waves of COVID-19 pandemic outbreaks and its variants, as well as slow progress in the rollout and distribution of vaccines. All monitored commodity prices increased recently except gold. Stock markets improved, reaching record highs in early 2021. The good performance was mainly on the back of low interest rate environment, complemented by asset purchases by key central banks that are encouraging investment in riskier assets such as equities. Moreover, sentiment was also boosted by the progress made in the distribution of COVID-19 vaccines, as well as hopes of further policy stimuli in some of the world's major economies. Since the last MPC meeting, inflation rates varied among the key monitored economies, but remained well contained in general. Notably, inflation edged up in the US, UK, Brazil, Russia, and China, while it decelerated moderately in India and South Africa. The Euro area and Japan continued to experience deflation, which started during the second half of 2020. All monitored central banks maintained accommodative monetary policy stances at their most recent meetings as policymakers adopted a wait-and-see approach amid muted inflation, while continuing to implement supportive non-conventional monetary policy measures. Let's look at what happened domestically in Namibia. Domestic economic activity declined in 2020 relative to 2019. The rate of inflation and the growth in the private sector credit extension declined in 2020. The stock of international reserves remains sufficient to support the currency peg. Domestic economic activity slowed considerably in 2020 compared to 2019. Contractions were observed in key sectors such as tourism, wholesale and retail trade, mining, manufacturing, construction, as well as transport and storage. The contraction was mainly due to the devastating effects of the COVID-19 pandemic. On the contrary, activity in the telecommunication and local electricity consumption generation subsectors improved during the same period. The domestic economy is estimated to have contracted by 7.3% in 2020 before returning to an expected moderate recovery of 2.6% in 2021. Annual average inflation declined to 2.2% in 2020 compared to 3.7% in 2019. The lower inflation was mainly driven by the decline in transport and housing inflation, mainly on account of the low international price of fuel, coupled with deflationary pressure emanating from the weak rental market. On a monthly basis, the inflation rate increased to 2.7% in January 2021 from 2.4% in December 2020. Overall inflation is projected to average around 3% in 2021. Growth in private sector credit extension averaged 3.5% in 2020, lower than the 6.8% recorded in 2019. The slowdown in private sector credit extension was due to lower demand for credit arising from weak overall domestic economic activity and repayments made by some businesses in 2020. Growth in credit extended to businesses declined to 0.8% during 2020 compared to a higher growth of 8.5% in the previous year. Since the last MPC meeting, year-on-year growth in the private sector credit extension rose moderately to 2% at the end of December 2020 from 1.4% at the end of October 2020 due to a higher uptake of credit by households. Business credit contracted by 1.2% in December 2020. As at the 31st of January 2021, the stock of international reserves stood at 34.4 billion Namibian dollars compared to 29.9 billion reported in the December 2020 MPC statement. The increase in reserves was mainly due to SACU receipts. The latest amount of international reserves is estimated to cover 5.3 months of imports. At this level, the reserves remain sufficient to protect the peg of the Namibia dollar to the South African rand while meeting the country's international financial obligations. So colleagues, having looked at all those, we have decided to keep the repo rate unchanged at 3.75%. Thank you for listening. The next meeting will be held on the 13th of April 2021. If there are questions, I'm happy to take the questions. If there are no questions, I'd like to brief you on two key things. That's the impact of COVID on tourism, and then the question that we are getting all the time about how effective our relief measures were. So let me preempt those two because it's going to come. So let me first start with the relief measures. You all know that in April last year, the bank has introduced some relief measures. Namibian commercial banks received about 88,000 applications, which amounted to close to 65 billion Namibian dollars. 65 billion with a B Namibian dollars. So the banks granted relief of about 65 billion Namibian dollars since April to December 2020. That was a success rate in terms of approvals of about 98%. In December alone, our commercial banks granted relief amounting to about 9.9 billion Namibian dollars, billion with a B. That was only for the month of December. And if you really break it down, who were the beneficiaries? You will see that it was mostly individuals. And under that category, we look at individuals, households, and also small businesses. From that 9.9 billion of December, about 3.5 billion was allocated to households and small businesses. Real estate, that's property, and business sector got about 1.7 billion from the banks. Trade and accommodation, about 1.4 billion. Mining, about 385 million. Other sectors got the remaining 1.7 billion. So the question is being asked, has this been effective? And we look at some international best practices in order to evaluate these type of measures, whether these interventions were effective. And I would like to believe that the Bank of Namibia's efforts and interventions were effective in supporting economic activity during the crisis. And we'd like to believe that some of these measures that we have announced will also go beyond the crisis once the pandemic is over. Secondly, what we wanted to do with our intervention was to preserve the health of the banking system. And I'm happy to note that our banks are sufficiently capitalized, they are liquid, and they are profitable. Capital levels of our banks remain at about 15.15%, while liquid asset ratios stood at about 15.7%. You know, we have seen that profitability decline marginally, but if you look at the return on equity of the banking sector, by the end of December, it was around 13.5%. So although profitability declined, it's quite a healthy return on equity of about 13.5%. And the third way we look at whether it was effective was to ensure that any intervention should not undermine the long-term credibility of the financial policies that we have got as a monetary authority. And we'd like to believe that on all three accounts, whether we've supported economic activity, yes, we have. Whether we preserved the health of the banking system, yes, we have. And thirdly, I would like to believe that our actions did not undermine the long-run credibility of some policies that we are taking. The question also being asked is what happened to the non-performing loans of banks? We were worried at one stage. And at the end of March last year, the non-performing loans of all the banks were about 5.2%. At the end of June, it was about 5.7%. At the end of September, it was about 6.5%. And at the end of December, it appears it is stabilizing now. It's 6.4%. So you can see that's 5.2, 5.7, 6.5, and it's down marginally to 6.4%. So it is stabilizing. So that's in terms of the relief measures that we have taken and how effective those were. Then the other one that I would like to share with you that many people are calling and asking us is the impact of COVID on the tourism sector. And Lorette will give you the high-level numbers in terms of the impact of COVID on the entire economy. But let me try and look at tourism alone, because we did a survey in November and we gleaned some interesting insights on the impact of COVID-19 on the tourism sector. During the survey, we focused basically and zoomed into four things. We said, what happened to bookings? what happened to revenue, what happened to the operations of that sector, and what happened to people or staff, employees. Those were the four. And what came out in terms of insight is Namibia used to receive an average of 40,000 tourists per month, but that 40,000 has dropped to about 6,700 between September and December last year. We estimate that the industry lost about 3.2 billion, billion with a B, from travel-related service as a result of COVID-19. We also, from the survey, estimate that the industry employs close to 83,000 people, both in the formal and the informal sector. We estimate from that 83,000, about 57,000 were employed informally, meaning, they don't have pension, they don't have medical. But it's quite also interesting that we also look at the 2019 report on tourism conducted by the Bank of Namibia, and that report estimated direct and indirect jobs created by the industry at more than about 100,000. The latest numbers are about 83,000. The 2019 report talked about 100,000. And direct and indirect contribution in the region of about 13% of gross domestic product. So the tourism industry is a substantial contributor to the country's foreign exchange earnings, estimated to be more than 5 billion per annum in 2019. So what did we learn? What did we glean from this survey that we did? On the booking side, about 69% of the businesses who participated in that survey indicated their bookings were below 10% of their normal level. The second one was on the revenue side. 84% of the businesses indicated that the revenue declined by more than 70%, 70. As far as the operations are concerned, how many of them were active, how many closed? About 76% of the businesses were active, with reduced staff. Some closed temporarily, and others have shut down. Only 24% of all the businesses were active, or fully active, during that period. As far as staffing is concerned, employees, 80% of businesses indicated that they have reduced headcount, and 87% that reduced have done by reducing wages by between 20 and 50%. So some people said, we know there were some pay cuts. What was the extent of the pay cuts? It was about 20 to 50%. So our estimates are currently that it was quite devastating impact on our tourism sector. So that's quite interesting. We also asked them, how many of you are optimistic that your businesses will survive? And about 60% of them indicated that they believe that their business will survive. They just needed to see it through on the other side. So I thought that was quite important that we share that. It was interesting insights on the industry. Thank you. I'm happy to take questions.
My name is Kayula. I'm a freelance journalist. Are you at all worried about the pickup in inflation, and did that play a role in the decision not to cut?
Good morning, Governor. Good morning, colleagues. Governor, I have three questions. The first one is on the roundtable discussions you had last week. I think it also ties in with the local monetary policy. From your meeting with some of the banking executives that were present at the roundtable discussions, are they happy that the rates are down? I think even yesterday we saw Capricorn post the trading statement that fairly because of low rates, the profits are now dipped. Just wanted to understand what is the feel on their end. Do they think they are under pressure from the central bank? And I think the second one is, you've also said in the statement that's released by the bank that the only element that which could be relied upon to spur growth in the Namibian economy was investment, be it either domestically or FDI. I think the question then is, I'm glad that you even highlighted that it's investments, but what could be expected? Is there any, let me try and put it this way, is there any way monetary policy could be used to influence or at least spread investments from that end? And then the third question is on fees. The determination was issued by the central bank that by 31st March, I think, the bank should now follow through with the disclosure of the banking fees. How has been their response with regards to the determination? I think also there's always question on this tends to add an administrative burden to the banks. How are they responding to that?
I just want to find out where will the growth come from in 2021, the 2.6.
Right, thank you. So let me try and start with the first one on inflation. So average inflation declined to 2.2% in 2020 compared to about 3.7% in 2019. In January, it increased to about 2.7% from about 2.4% in December. So the question is, are we worried about that? If you look at actually what we are projecting, January is about 2.7%, and we project for the full year it's going to be around 3%. So I think inflation is probably going to be low for longer. So at this point in time, we are not so concerned if you look at the forecast and our projections. As far as the roundtable questions are concerned, the rates are down. What, if I understand you correctly, are the banks happy with the fact that rates are down? If that is the question. Let me try and probably just give you the context of the roundtable, because many people are asking questions around investments are coming before I get to whether the banks are happy with the round. So the context was, we look at how does one grow an economy. We just went back to the theory and said, if you need to grow an economy, not in Namibia only, but throughout the world, you basically look at four things. The first one is you need your government to spend on the productive side, hopefully, to grow the economy. We know our government, the fiscal space is limited. The second area you are looking at is households. People like you and I and small businesses, they need to spend, and that stimulates economic growth. So that one, we also know that many people lost their jobs. We've got high unemployment. It's challenging to really look at that element to produce growth for us. The next one is you look at your net exports and say, we need to get net exports more than what we have got. At this stage, we know what happened with commodity prices. We know what happened with demand. Because of the low demand and low commodity prices, that's not an element that we need to look at. So the fourth one is the only one that really gives us hope at this point in time. That's investments, both domestic and foreign investment. We need serious capital formation in our economy to grow the economy. So where is growth going to come from? Growth is in 2021. It's going to be to a large extent low base effect. Secondly, it's going to be, we've got good rain, so we hope our crop production, not livestock, because people are rebuilding the herds. On the crop production side, we are quite optimistic that it's going to help us to get that growth. And we think in 2021, And particularly in 2022, our mining is going to come through. On the diamond side, we're going to get the second vessel into production in 2022. And we hope that the Elizabeth Bay mine is going to help us on the diamond production side. You guys also have seen the other day, there were some reports around a new uranium mine that's been opened in the country. So on the mining side, we hope agriculture and mining to come through in terms of where growth is going to come from. Are the banks happy with the rates? Obviously, any reduction in interest rates creates some margin compression for banks. So if you run a bank and you know that there's going to be a compression, there is going to be a reduction of your interest income, clearly that's probably not something you want. But they have got no control over that. That's the monetary policy decision that we need to take. And they have not indicated that we are happy or we are not unhappy. But purely it has got an adverse impact on the interest income of banks. So somehow they need to compensate that by managing the book and see whether non-interest income is not coming to the table for them. The other question is, can monetary policy help in terms of, I'm not so sure whether I get you, Lazarus, with that one. As far as the fees are concerned, we're still on track that the determination we have given that they need to disclose by the end of March, they need to do that. Some of them started disclosing that. Although it's an administrative burden, it's a balancing act between an administrative burden, compliance, and what we expect in terms of the stability of the system and from consumer point of view. I'm not so sure whether I get you on the question on the investments, Lazarus, if you can repeat that.
So on the question of investments, Kevin, I just want to know, ideally, the monetary policy is used to curtail high inflation and debt and all of that. So I just wanted to know whether it is also a possibility that it could be used. I don't know in what manner. I think in the manner I'm trying to say is, some analysts will say there's still room for the central bank to cut the rate, say down to 3.5%, and in that case, that could probably allow certain businesses or certain individuals to take up credit and spare and push out investments. Is that maybe a consideration that the central bank has somewhat deliberated upon? If that could be allowed? From what I understand also is that in as much as these cuts have been happening, credit uptake has still been on the low. So if we cut further, would it somewhat push investments now? And then and then place now all our hopes on investments to spell growth?
Right, thank you very much. I got your question. So I think at 3.75%, interest rates are as low as you can get. I think from a cost of capital point of view, to attract investments, most of the investments that were unattractive, not feasible at 8, 9, 10%, should be at 3.75% feasible. So would a 25 basis point cut, do so much in terms of attracting investments? I doubt. And attracting investment is not the only consideration when we look at whether we reduce or adjust interest rates. It's just one element that we look at. And we'd like to believe at 3.75%, interest rates are really low enough to make investments attractive and compelling. And that's unfortunately not the only consideration for us. We look at economic growth, we look at inflation, we look at credit uptake, we look at a whole host of issues. And after we've balanced all those, at this point in time, we believe to keep it unchanged. But you are right that from a monetary policy point of view, if you have got rates at the level where they are currently, it should actually help with investments. If you have got currently an investment decision to make, it should be very compelling because it's so low. another 25 basis points would probably not help in terms of an investment decision. And what is this investments that we are talking about? Many people are saying investment in where? We are talking about investments in productive sectors. If we really need to move the needle in our country, we need to invest in water, we need to invest in electricity, we need to invest in housing, we need to invest in broadband. That's productive investment that's needed. And we can do it through government, we can do it through public-private sector participation, or we could do it through the private sector. But that's the type of investment that's going to take us out of where we are. You see, what we also need to tell people is that the long-term economic potential of Namibia is unquestionable. Many people are doubting that. So I just want to make that we all understand that the long-term economic potential of Namibia is unquestionable. All we really need to do is to pull the right levers. Like we need investments, we need confidence in the economy. That's the type of things we need to do. We can get out of this. And as a monetary authority, I think we have done what's necessary as far as the interest rates are concerned. And at 3.75% to bring us all back, we think it's an appropriate level where it should be.
Morning, my name is Stephen from Energy and Water Focus. I see here you are saying that there were increased activities in the telecom and electricity generation. Now, given that this is the same period when economic activities were practically down, how did this come about? Thank you.
My question, Governor, is level of NPLs. You said towards the end of the year, somewhat stabilization in the NPLs. I just wanted to know, given, a whole lot of companies are kind of still closing. In Namibia, for example, is one of them, where you've got all these people that are going home. Do you foresee that NPLs in this coming 2021 are still going to rise? Given that they still kind of lack less confidence in the economy and employment is still hiking. Is this kind of stability kind of short-lived? Or is it like a complete reversal going back to, say, 5% or 4%, back within the 4% which the central bank has put up?
Right, let me start with the first one. I'll ask Florette to probably respond to that as well, if she needs to add. If I hear you correctly, Steve, then the question is, economic activity has slowed. How come the telecommunications sector is picking up? With the lockdowns that we have got, everybody was working from home, and everybody needed an internet at home, some connection. Most of the schools sent people back home, and children had lessons from home. We had some online learning by the universities. Most of our universities had students that were attending classes online. And then we have got e-commerce that also picked up quite significantly. So the demand for that part has increased. So that's why you see an increase not only in Namibia, but throughout the world. The telecommunications sector has become quite hot. I hope, Stephen, that answers your question. I don't know, Florette, whether you want to comment on that one. As far as the NPLs are concerned, it is stabilized. So if you just look at 5.2, 5.7, 6.5, if December was going beyond 6.5, then you should probably say, what is happening? But I get a sense it is stabilized. And it is stabilized because if you also analyze the fourth quarter credit, there is a slight uptick. Even with that uptick, it is stabilized. So just look at your credit numbers for December. It is, December was a good month. Some of our businesses are telling us December was good as a normal month for us. So even with that slight uptick in credit uptake in December, NPLs have actually stabilized or marginally come down. So the different banks have got different books that they are managing. At this point in time, I'm pretty sure the banks will continue to manage the books to make sure that NPLs are in certain thresholds?
One of the biggest problems that has been there even before the COVID, as far as investment is concerned, is the concern about policy certainty. Now we are talking of investment as being the main key driver for economic growth going forward. Have you or the government resolved the issue of policy certainty, especially around NIEF and all the others? Thank you.
Let me probably put it first way. There is a realization in the government that we need to do something in the space as far as investments are concerned. That's why you have seen a whole new investment promotion board, development board has been set up. There's a new chief executive. I see they are currently recruiting. So there is realization on that part that we need to do something on investments. When people talk about policy certainty, the two things that we always hear is about NIEF and about NIPA. As far as NIPA is concerned, I'm pretty sure the new investment promotion board, that's probably one of the priorities they'll be looking at. And the other one is around NIEF, and hopefully, let's hope we'll get some clarity that is entirely outside the realm of jurisdiction of the Bank of Namibia. But those are the two issues that we are picking up from investors in terms of policy uncertainty. Florette, I don't know whether you want to respond to that?
Governor has covered it pretty much. That it is, and government has made a commitment and has given a time frame now in terms of when they want to finalize the PSO. So I believe that within the first half of this year at least, there will be feedback with regards to NIEF. So there is a strong commitment, and I believe there has been statements made by the government in terms of NIEF. So with policy certainty, surely that is a commitment, and as Governor has indicated, we will just wait with all the commitment that has been made with the Namibia Investment Board, that should be resolved during this year.
Thank you. Thank you so much. Thanks for listening.